Mannapuram Finance has had a decent first quarter with its assets under management crossing the 16,000 crore mark for the first time ever. Gold loan lender saw its bottom line rise nearly 20%, though the stock starting off 3% lower. Joining us now to talk about the numbers and the recent future and the future going ahead is P Nandakumar, MD and CEO of Mannapuram Finance. Also joining in for the discussion is Saloni Dhanuka. Saloni.
Thanks for that, Neeraj. Good morning, sir. Could you start by giving us how much did the gold and non-gold business contributed to the top line? Also, if you can share the mix between the two and your target mix for FY19.
So the gold loan, which is the biggest chunk, around 75%, that can grow double digit. We expect that growth momentum will continue for the next 3-4 years at least. The online gold loan, which is the digital gold loan, that is also catching fire. Now it was 32% last quarter, it has grown to 37%. So it is growing at a pace of 5%. These are the good aspects of the business. The consolidated ROE stands at over 20%, which is targeted. Our target, business target is a growth of at a rate of 20% and maintaining an ROE of 20%. That is established.
So just to complete that point, what about other segments? What could the growth be in home finance, commercial finance, microfinance, SME lending all put together?
The distribution in non-gold is 2,500 crores in microfinance, 700 crores in commercial vehicles and 400 crores in home finance. This is the distribution. And microfinance has come back to the pre-demon days. The recovery is back to over 99%. And the profit after tax has gone up to 29 crores during the first quarter. Whereas last year, first quarter, it was a loss of around 16 crores. Now, the first quarter this year, 29 crores is the profit after tax.
Can you also update us on your recent acquisition of Indian School Finance Company? You are relatively a new player in housing and vehicle finance space. Where was the need to diversify your portfolio so quickly?
Microfinance is run by an established team. The same promoter and the team is running, even though we hold around 95% stake in the company. So that business is going strong. Here also we are acquiring 85% and the same team with good experience in the industry will be running the show. So we don't worry about the management bandwidth in running these companies. The company has the management strength. We have identified that, assessed that. And the business has a good growth potential. So these are the strengths in the business. We will further strengthen the capital and the availability of the debt with our, when it becomes our majority owned company, the availability of the debt at a lower cost will go up. So this is good for the company. The microfinance, the home finance business and commercial vehicle business, the setup is strong now with a strong team and setup, technology, etc., etc. These businesses are poised to grow.
Also, sir, the board has approved fundraising in the tune of nearly 3,000 crore in FY19 through issue of public non-convertible debentures. So where do you plan to deploy these funds?
See, this is for the purpose of filing shelf prospectus. For issuing non-convertible debentures, this will be through a private placement as well as public issue. Private placements are happening to institutions which are listed, which will be listed, and the public issue of NCDs we are planning for a public issue, maybe of a size of 500 crores with a green shoe option of an equal amount, may happen in September. We are making sure that the dependence on CP, etc., are brought down to a reasonable level.
All right. Are you seeing any asset quality pressure in some of these newer businesses that you are increasing your exposure to, whether it is SME lending, home loan, commercial vehicle, etc.?
No, the commercial vehicle, two-wheeler, etc., our asset quality is better than the industry. The gross NPA itself is only 2.9% and net NPA after the introduction of Ind AS, the norms, etc., it has come down. It is net NPA is down at 0.2%. So it is not at all above the industry standards. Home finance, there has been a higher level of NPA, which we are consistently bringing down. Every quarter, there is a reduction in NPA. Currently, we are at 4.5%. We are pretty sure that quarter on quarter it will come down by 50 basis points and get stabilized well below 2%.
And how would yield hardening to almost 8% will impact you? Is the company looking to change its borrowing profile? How do you intend to pass on that to the customers?
So the standalone borrowing cost is at 8.77%. So there could be an increase of some 20 basis points. So this can be passed on in the case of the gold loan, because our products are very short term and the churn is very fast. So that like a credit card, passing on some 20 basis points may not be difficult.
Sure, sir. So my last question to you is if you could leave us with some guidance for disbursement and loan growth in the current fiscal year.
So I always maintain that in our consolidated business, 20% CAGR is possible and maintaining 20% ROE is also possible. So we are on the right track.
Sure, sir. Thank you so much for speaking to Bloomberg Quint. It was a pleasure talking to you.